Well, look, I remember even going back. I remember in PPN Dublin with Stephen. We were over at the very first night. It was like, meet me in town. We're heading up to the Property Biz Open, and it was a fantastic night. And again, I could see your passion at the time to get this peer-to-peer lending.
Yeah, we had a launch event then in the Conrad Hotel, Central Dublin. We launched the business. We lent maybe a few $100,000 in year one, 2018, and we lent 50 million last year. So yeah. So it's been a journey. The last, 6.5, 7 years have been a journey. So it's been good.
Welcome back to Platinum Properties Podcast. In today's episode, we are joined by Property Bridges founder David Jelly. Property Bridges is a leading alternative lender to the Irish construction market. They provide development and bridging finance from 500 grand up to 15 million at competitive rates. Property Bridges has a focus on, but not limited to, the residential sector and provide unrivaled speed of service. Having been one of the first online platform lenders in the Irish market, Property Bridges takes an innovation-led approach. So sit back and relax as David explains everything that you need to know about Property Bridges. Enjoy. This episode is sponsored by Property Bridges, Ireland's leading peer-to-peer property investment platform.
All right, team, welcome back. And in today's episode, I have a great friend of mine here. And I also have plenty of ways where we're going to bring this podcast for your benefit. So again, as I always say, take a pen, piece of paper, sit back, relax. If you're listening to this on Spotify or iTunes or YouTube, just relax, sit in and let it sink in. Hardest part in the property transaction is finding the money. And today, I brought the money man in. So David Jelly, founder of Property Bridges, a well-known, trusted company here in Dublin. You're very, very welcome into the Platinum Studios.
Yeah, I'm delighted to be here. Thanks for having me.
Lovely stuff. So just taking us back, you're the founder of Property Bridges, which is a fantastic company, which I hear a lot about all the time with our training company. But last time we may have had you in, I'm just trying to jog my memory back. I think it could have been 4 years ago.
It was definitely 3 or 4 years ago, yeah.
Yeah. And so much in your space has changed. So much in our own space has changed, which we might go into now in the next few minutes. So said you're very welcome back in. Give for people that are listening in a little bit about yourself and what you do on a daily basis.
Yeah, so I'm David Jelly. I'm founder of Property Bridges. So my own background, I've a background in banking. So I started off in the IFSC. I worked as an equity derivatives analyst. Then I moved to London, started equity trading for a US investment bank. And then I came back to Dublin in 2013. And at the time, I mean, you'll remember it well. Like, the property market was decimated. It was on its knees. There was very few houses getting built. It was extremely hard to get finance. So at the time, I was working for a startup, but I thought that if I could set up a company that could provide funding to SME builders, that it would be extremely popular. And at the same time, interest rates were on the floor. So investors were getting zero for their money. So the idea of Property Bridges were to really bring these investors together with, professional home builders, and to connect these two groups through an online platform. It's called peer-to-peer lending, crowdfunding, which is now a regulated industry within Ireland. So we set up in 2018. We launched the business, and since then it's grown every year. So we lent, with the first year, we lent a few $100,000.
Yep.
It was extremely hard to get off the ground. We had kind of no big institutional backer behind us, with no family office. It was just kind of all kind of sweat equity, hitting the pavements, trying to get as much exposure as we could on RT, Irish Times, online. We had a launch event then in the Conrad Hotel, Central Dublin. We launched the business. We lent maybe a few $100,000 in year one, 2018, and we lent 50 million last year. So yeah, so it's been a journey. The last 6.5, 7 years have been a journey. So it's been good. been
I
good.
remember when you did come upstairs, you had a full set of hair.
Yeah.
On it.
Not sure about that. But yeah.
Well, look, I remember even going back. I remember in PPN Dublin with Stephen. We were over at the very first night. It was like, meet me in town. We're heading up to Property Bridges Open, and it was a fantastic night. And again, I could see your passion at the time to get this peer-to-peer lending.
Yeah.
For our own business, it's what really took it off is peer-to-peer lending, that we can use it really quickly. So we'll probably grab a bit of your knowledge in the next while of that. And even my own property mentor, which you'd know, Ed Martin.
He gave me a hard time.
He always said, and I'm gonna fill in because he listens into all of these as well. He said to me, "Well, I've no issue ever owning up to one mistake I made." And I said, "What was that?" And he goes, "Man, I did not see that man's business. I fucking gave him a hard time, but again, he's out there smashing this business."
Yeah.
So
yeah, he said it would never work. He gave me a very hard time that night, but thankfully I've proved him wrong.
Yeah. No, and he always talks about the business now, saying how good it is. And I'd often hear him knocking around upstairs in the seminar rooms, pointing people to your direction. So sometimes we do need a bit of a kick in the teeth to say, "I'll fucking show you. We'll get it up off the ground."
Yeah.
So again, just take me forward. Peer-to-peer lending, just for people that don't know what it is, because a lot of people that come into the property space, a lot of people that come into property training, the only thing they think they're going to do is ring up AIB or ring up Bank of Ireland and ask for money, and they're told no. Or little Sharon that's maybe 18 has zero clue about property, refuses your loan. Just a little bit about your business model of how you can get the peer-to-peer lending in, number one, and then obviously connecting with people.
Yeah. Well, it's a two-sided marketplace. So like we have to originate loans from professional builders on one side, and then we have to originate the investment on the other side. And you have to constantly balance those things as you go. So we've got about 10,000 investors that have signed up to the platform, of which maybe 30-40% of those are active. So we've got about 3,000 or 4,000 active investors that would some of us have joined in 2018, some have joined in the last 2 weeks.
Yeah,
but that's growing all the time. So
can still people join easily?
Yeah, so it's you just go onto the website and click on the sign up link. It takes you a few minutes. Now you have to go through the onboarding process, proof of address, passport. We have to obviously apply ML, KYC. We're fully regulated, so all that good stuff is done. Like any investment platform, if you sign up to Trading 212, to Giro, anything like that, it's the same process. So we would try and attract investors to the platform, and we've done a good job at that. Then every week or 2 weeks we put an investment offering live.
Yeah.
So we would fund, like, we provide bridging and development finance. So we always think we are the best kind of platform to get exposure to the Irish property market.
Yeah.
Because as you said, like, a lot of people might want to buy a buy-to-let property, but might not have the money for it, or people that can't afford it. There's a hassle. A lot of landlords are getting out of the market now.
Yeah.
Because taxes are high, regulations through the roof. So
and property, like, I mean, a lot of people do say that to me as well. You have, like, a lot of people forget as well. A lot of landlords nowadays, especially the ones that I get to meet, they've headed to 60, 65, and this thing is peaked in their eyes, and they're like, do I take another struggle? Like, we've one guy upstairs to put him over $1 million back into this network, but he just called the market. He didn't call it correct last time, and he had to wait another 12 years. And he said, Paul, it's just right for me now. But now he obviously has the money because the properties were worth huge. And this particular guy told me as well, he built this portfolio by a long time from blood, sweat and tears.
Yeah.
He remembers having, like, no money in his own home to heat his own home, and he had this thing called a buy-to-let. Yeah. So he said this was a major struggle, and him and his wife have decided, not through regulation, he's always had a great career in property.
Yeah.
But just the time that he's going to set up maybe one or two of his own kids, and and I think
and that's the thing about investing. So, like, investing in, property might be more suitable when you're a bit older, you've made a bit of money, you want a stable income.
Yeah.
And it's not right for everyone, and that's why I think kind of the younger generation are probably a little bit kind of lost these days, because whenever they try and get on the property market, it feels out of reach.
Yeah.
So that's why I think, anyway, a lot of the younger generation are getting into these very high risk trades, like Bitcoin, correct. Because like making, 5%, 6%, 7% per annum to, a young person that's trying to save up a deposit, they're probably thinking this is going to take me 20, 30 years.
Yeah.
They want to like double their money within a year. So they're driven into kind of risky assets like Bitcoin and crypto, and, they're playing the stock market. They're buying like, the NVIDIAs and all the rest of it. So like we offer something different. So we offer an exposure to the Irish property market, and we offer like fixed returns. So at the minute we're offering between 7 and 8% return.
Yeah.
It's fully secured. So we would take first charge security over the property.
Yeah.
We're typically giving a bridging or development loan. So the way it works is developer would come to us. You might be building 10 or 20 houses. We'll assess the loan. Then we'll go through a due diligence process. So the due diligence process we go through is very similar to a bank. So we get an independent valuer to value the site and value the finished value of the properties when they're built. We'll engage with a quantity surveyor. So the quantity surveyor will do a full report on the project. They'll go through the costings in detail. They'll go through the program. So how long is it going to take to build?
Yeah.
What's the method of construction? How complex is it? What are the site conditions? Is there any historical features we need to look after? Is any flood risk? So the report we'll get from the QS will be incredibly detailed. And then we go through a full legal process. So we'll investigate the title. We'll put a facility agreement in place. We'll take security of the property. We might take a cost overrun guarantee from the borrower. If it was a development project, there'll be various collateral warranties, other security guarantees in there as well. And then it's a very active form of lending. So we always fund in arrears. So it's not a matter of developers building 10 houses and he needs 2.5 million. So we don't underwrite the loan and there's 2.5 million. Where you go. So we always fund in arrears. So the way it works is the developer will go off. He'll do a month's work.
Yeah.
He will call us, or he'll call our QS. Our QS will go out on site. Our QS will inspect the work. And then the QS will do a report for each drawdown. So the QS will say, okay, this has been built to regulation. They'll get a sign off from the assigned certifier or the engineer. They'll inspect the work that's done, make sure that if the developer says he spent 200 grand, that he actually has spent 200 grand, and it's built to planning and regulation.
Yeah.
And we get that sign off from the QS, then we'll go out and raise the 200k or whatever it is, and then we'll release it. So we're always kind of a month behind. We're always in arrears. Developers' money and equity always goes in at the start. So we feel it's a very secure form of lending. We feel it's low risk. And I think we've demonstrated that over the last 7 years. So we've done over 75 loans, and every single loan, bar one, has repaid with the advertised interest rate. One of the loans we recovered 92% of the principal. So of 75 loans, it's a good strike rate.
Absolutely, yeah.
Yeah. And then we're paying between 7 and 8% per annum at the minute. Yeah. So it's a good return for the level of risk.
Yeah, and I mean, no matter what you're investing in, people always tell you about the good things. Yeah, there is a level of risk. So you, like, if I'm listening to this correctly, you are heavily involved in the property side.
Yeah,
you are looking in at the property investors. Two things are really bouncing around my head now. Number one, I've probably a group of 100, 150 people that just haven't got. They want their money in property. They've
Yeah.
come through our
Yeah.
training. They love it. They like it. But they say, like, sometimes they say to us, Paul, look,
We are delighted to announce that this podcast is sponsored by Platinum Property Training.
start your property education today. From simply one click of a button, you could be part of the Platinum team. We have made this so affordable for everybody in the country. If you have any interest in property, there's no reason why you shouldn't be part of the Platinum brand. We have got it all systemized. It is right in there with rookies. You can spend 4, 5, 6 or 7 months in there till you get to a certain level, and then you can step up your way through the programs, and you can really start to educate yourself. And we're here to help. We've got the best systems in the country. Click the link below, and we will see you there. Because they watch all our WhatsApp groups, and they're like, it's just fucking too much.
Yeah.
We still want a return. Number one. And these people would have maybe
too much in terms of the quantum of money, yeah.
No,
Or the
quantum
the
of work. Because I know in the UK, and I always kick the boot in here, and I go berserk if I ever hear anyone in the Irish space saying that what we do is easy. It's not. It's quite difficult. The margins are very, very good if you can pull it off, but you're on demand all the time, and you know, you're out there cleaning up sites, you're pushing floors, you're getting them over the line. We're trying to please you guys. We're trying to get their next money in. It's a never ending cycle, and it takes a lot out of a human's body. Now, for that portion of my group, they can still jump over to your platform and get a return if they wanted to instantly and get returns of 7% because it's driving them mad. They might have 100K in the bank, and they really want to, they know they can multiply this thing out. They might have looked at their investment and said to me, yeah, look, we really want to do it. We're just not ready quite yet. So that level can come in. Number two, if someone like me had, let's say we're in the middle of developing 12 apartments. So we talked about this earlier on. Your risk side to that isn't like some of the other lenders that we would know. You seem to be really engaged into meeting the builder, meeting the team, meeting the people behind it, meeting the platform. And when you say you have this thing at low risk, you've reduced all the risk you possibly can.
Yeah. Aside from actually building the houses, we mitigate as much as we can.
Yeah.
And we've been doing it for 7 years. And that's the business we want to be in. Like, we're in a housing crisis at the minute. Like, we want our capital to go into building houses.
Yeah.
You know, we're not really in the business of kind of being a landlord or sitting in properties. It's really kind of that active capital that's going into building the units. So similar to what you're doing in your project.
I might I think I'd use that as a case study because people are probably listening into this that have buildings.
Yeah.
Maybe have struggled because a lot of the people again that we speak to, they're jumping down the gun of AIB, Bank of Ireland, and they mightn't have a big track record behind. They just can't get this project up off the ground. And especially now at the moment, like we've bought a couple of units and we have them on standby. That there's a commercial to resi trick, not a trick, but I mean, there's a little loophole in there that can take a building from a commercial building, and we could put up to 9 apartments in it, and maybe these guys have them. So might use me as a case study, and you can tell me, well, Paul, this is what we look for in that type of a deal, and I might give value to someone that's listening in, and then obviously they might connect with you. So our particular building, it was commercial to resi. It took us a long, long time to get around the planning. We had to please a lot of people, but we got it and we owned it.
Yeah.
So we might talk back and forward of how this looks because we're possibility going to be going looking to yourselves for funding, or we look to maybe someone else for funding. But how would you look at our building? So we have a building that we're now ready to develop.
Yeah.
It's built. It's a core building. The fantastic building, and we've got approval of 12 units now in it.
Yeah.
And we want to push into the space of maybe elderly living or over 55s, or we're not 100% sure, but how would your risk?
Yeah. So the first thing we look for is track record.
Yeah.
So what's your experience? What have you built before? You know, have you built something like this before? So if you've got a track record that is number one, or it's quite on the list. Then the second thing we look for is alignment. So we want to see that you've put your own hard cash in there, which you have. So you've went off, you've bought the property.
Yeah.
You've also enhanced the value of the property by getting planning.
Yeah.
So that's another plus.
Yeah.
So then we would value the price of the building at the moment. We would need to get a full development appraisal from you. So we need to get full costings, full development program. Like, are you going to refurb it in 6 months? Is it going to take 18 months?
Yeah.
What drawdowns are you going to draw down in month 1, 2, 3, 4? So we need the full program. And then we want to see what the exit plan is. So are you going to hold on to it? Are you going to refi it, get a mortgage on it? Are you going to sell it when you build it? So those are all the things we need to consider day one.
Yeah. And then after that point, then so you've looked in at the team, you've looked in at the exit, which in our case we're going to be selling. We could easily keep it, but I mean we're going to be selling because we're going to be looking at this model as going forward. So you've looked at the risk, you've looked at the thing. We then would have to put up a proper appraisal right through for you to. You're obviously going to be looking at the QS that's writing that up too.
Yeah.
Is that your own in-house QS or is that our QS?
No, we always have to get an independent QS. So we get an independent valuer and an independent QS. So we would expect you to have your own QS.
Yeah.
You to send us in a proper costings, bill of quantities. Our QS would then engage with your QS.
Yeah.
Go through it in detail. Our QS might say, they need to add 5% onto their contingency, or I think they're a bit light there, and maybe they could shave here. And then there's an agreed budget, so you have to agree the budget on day one
for the development.
Yeah.
Yep.
And then we expect you to stick to that, and then the cost overrun guarantee comes into play. Well, if you don't stick to your budget, then we expect you to put in your own money to cover any
overruns,
increased cost. But the one of the most important things then is profit margin. So we would look at your appraisal, we'd put that into our own models, and then we'd look for a minimum threshold of 15% profit margin.
Yeah.
And then if it meets that criteria, then we would issue terms.
Okay.
Yeah.
So then it comes back to us. You issue us terms. You issue us terms, and we go through our terms. We obviously sit with our legal teams, find out if it's something that we're interested in. Let's just say that Property Bridges and Platinum Ventures got this now dream up off the ground, because we've done a lot of the hard work now, and now we're ready to. This is what's needed. We are in a housing crisis, and again, mainstream banks want your own mom to come down and sign over half of her life for these things. And Property Bridges obviously have peer-to-peer lending, so you've got 10,000 active investors that once you drop something positive like this out with a good team behind it, it will nearly self-fund itself. So when we get it to that point, we get it to terms. Obviously, legal teams go back and forward with each other. If they agree, what's next?
So if you agree terms, then you would have to pay a commitment fee.
Yeah.
So the kind of onus is on the borrower to pay the fee that then we'll go off and instruct our quantity surveyor, valuer, lawyer.
Yeah.
We go through a due diligence period, which typically takes 4 to 6 weeks.
Yeah.
Like there is a fair bit of work involved. And if it comes through the DD process and everything, the I's are dotted, the T's are crossed, then we move into the program. So if it's a part acquisition loan, we would raise the money to put into the acquisition. Or if it's a development loan, you would go off and do the first month's work, and then the QS would go out, and then we would draw down that month, and then it just keeps going for the rest of the program then.
Yeah. And then in the terms on a development like a scale like that, and I know there's probably plenty bigger developers looking in at this, but how long, what's a typical loan in that space for, say, to build out 12 units?
Well, it depends on the size of the developer, but it could take anywhere from 12 to 24 months.
Yeah.
Yeah.
And you use a loan up to 24 months, no problem.
Yeah. 24 months, 30 months is our max term.
Okay.
Yeah.
And then after that, then obviously when apartments start to sell out, money starts to come back in, we're paying back down.
Yeah, a lot of apartment blocks we see now will be sold in AHB. So they'll be sold in bulk. It's rarely we'd see an apartment block to be sold piecemeal.
Okay.
But I'm not saying that you can't go down that route. But yeah, the developments we would fund, then the repayment as the developer then sells the properties, then he would make the repayments to us. And then when we're fully repaid, then we release our security, and then
off we
yeah,
go.
Yeah.
So at that point, then, which I mean is the if that comes into this, because with the shit that Trump's doing and the stuff that's happening around the global worlds, I mean, if that man says one thing, it causes fucking. We've had Jim Power in here there not so long ago, and he's an economist for a long time, and this man is driving them absolutely insane because he does not know what moves are going to happen, and the moves can destroy loads of different things around the economy.
Yeah,
but all that's built. I presume you guys are looking for like partners to come on that you've got a good set of builders, you've got lads that you can trust. We're not in a big country.
When you're in the lending game, it's all about your borrower.
Yeah,
it's all about who you're lending the money to. Like, that's more important than you could have the best projects in the world with the most profitable project, but if the guy building it, if he's not experienced, or he's not a stand-up guy or girl, then you're typically not on the good thing.
Yeah.
So it's all about the borrower, number one.
It's so funny the way you say that, because
and it's all about the team as well.
Team behind it.
If the developer themselves don't have a huge amount of experience, if we can see they've appointed a good team in terms of a QS, contractor, engineer,
track record of people are involved
with a solid track record, yeah. So that if some people are listening to this that maybe have got some property experience and want to get a bit more, like, that's the advice, and you've been getting no from some financial institutions, like, that's probably the best advice I can give you. Like, surround yourself with people that do have the experience and try and build a team.
Yeah, because what you're doing is you're taking off maybe where they left off. You have, if you've built up good trust with people, I always say relationships are going to be the key to anyone's success. And it's the key to getting the nod, and it's the key to getting your first chance. It's the key to everything. Folks, your network is your net worth. I've proved that several times already. So it's a good quote from Dan Penn: you show me your friends and I'll show you your future. It's a fact. Sometimes in life you have to let go of the good things and focus on the things that are going to make you money and make you successful. If you're looking to connect with high net worth individuals, join our community today with a chat system in there to help you grow and scale your business and your property portfolio. I hope to see you on the other side. And it's the key to you letting them know, well, look, even when shit does go wrong, I'm going to try my best to get this thing back in the door and finished and over the line. And that's what we want. But it's funny the way you say that from a finance point of view, because I've literally just been back from Necker, Ireland with Richard Branton's own home, and I spent a week with him. And there was about 4 or 5 guys that are in your space. And I'm talking to them from a development point of view. They're talking from Len. And we're chatting it out like we're chatting now.
Yeah.
But I mean, their business model as well. And they've lent out millions. Like the numbers when it goes to America, it's just ridiculous. But the one thing that one of the guys said, I was having a beer with him one night, he was like, listen, like, we want to know about your mom, your dad. It's you. Yeah. It's you and your team. And I think young investors nowadays forget about that. They don't realize that you do have to build a team. You do have to have a good track record. And you can't just go for fucking Bitcoin, and you can't just go for gold and think it's going to work. If you want to put in and you want to get the real money, you have to build out teams and you have to be people's. That whole week that I spent over there, a man's built 400 companies. Now, I know a lot of the companies were probably taken off of the Virgin brand, but that was all about 2 things. Number 1, building a culture that people have fun.
Yeah.
You have to have fun in a work. And that's really difficult for me to even say, because young entrepreneur, figuring out money, watching money, it's very difficult to incorporate a lot of fun into a business when you're obviously under pressure, which will change. And number 2, a company is people. And if you can get people to work together, they will take your brand to the next level and push it in. So yeah, I think that was a major thing that we'd learned. So we get the project over the line and complete. Your investors then get paid back. They're delighted because maybe they're the people that didn't want to get involved in all of this level of risk and get involved in trying to do these builds and create the money, and they simply wanted the return. Let's just speak about them people for a second, because they're, in my eyes, from my career and your career too, they're like so important.
Yeah.
And you know, if you've brought 10,000 of them people together, and I think even in the Irish banks tonight, I always shoot it out, there's like 160 or 170 billion sitting there doing zero, collecting zero. You've no level of interest. One of my wife's uncles invested a few bob into us, and he's in his 70s. And I said to him one day, I can't say his name, do you mind me asking you why you invested in me?
Yeah.
And he was like, well, I'm fucking bored. And that money, from the little bit of knowledge I have, that money that I have is now going to zero. And I can look at these projects, I can come to them, I can see you taking your company. So it wasn't about the money really.
Yeah.
Well, it probably is, but he was getting a good return back from us. Plus he was getting to see that his money's out working.
Yeah.
And they're really important people.
Absolutely. We wouldn't have a business without the investors. Like we rely on them so much, and that whenever we land in a project, we land as if it's our own money. But you mentioned Trump a couple of minutes ago. And a lot of people are investing in the stock market, but the stock market is going up and down like you at the minute. So when Trump makes a tweet or when he puts on another tariff or takes it off, like the stock market's going crazy. So, you know what? The good thing about what we offer is, it's not completely isolated from market moves, but it would be less, it's not good. Like our interest rate is fixed.
Yeah.
Unless, something major happens, people are going to get that 7.5% return at the end of the year. So, there is a bit more kind of security in what we're doing. So we're just offering an alternative to people.
Yeah.
So if people are thinking, the stock market's a bit frothy right now, or they're unsure what Trump's going to do, but they don't want to keep their money in the deposit deposit account earning zero.
Yeah.
Then they can check out what we do. If they think it's appropriate for their level of risk, well then they can invest with us. But it's an alternative. And I think in Ireland we need more alternatives because there's not a huge amount of options out there for investors. A lot of people might open a stock trading account or whatever, but in terms of getting exposure to property, it's it's a bit more difficult.
And I think, obviously, I'm a property guy, but I mean, there is no better place to put your money in my eyes. And you have to, if it's in with the right people, and it's moving at the right times. And again, that's really, really important piece. Making sure that the right people.
But you can do both as well. You can invest. People should diversify. So if they've got like a portfolio of stocks, they should put a bit of money into property as well.
The last round we done, we took 500,000 in, and that came in from the stock market because that stock market was just too much for her in her life now. She exited the company, she put a lot in, she lost a bit in the stock market.
Yeah.
But this thing was just too much, going up and down, up and down. And we fixed a good rate with her, and she went, no, that's fine for me for the year.
Yeah.
I don't have to worry about this craziness every week. And again, going back to Trump and going back to Ting and, going back to a lot of other movements that can happen through the stock market. And look at the pension companies nowadays.
Yeah.
What are they all doing?
Yeah.
Oh, look, guys, that market's a bit too, let's get your money into property.
Yeah.
It's not going in. So it's going in there for a reason, because it's a steady eddy and it's a good return. And I mean,
and I know there's scars in Ireland from what happened in 2008, but it is traditionally a pretty safe asset class, property, and the fundamentals of the property market in Ireland at the minute. It's the best place to invest, if you ask me, because like the environment we live in currently, you can't get anything built. It's very difficult to get anything built. So the government are talking about like 40,000, 50,000, 60,000 homes. I can tell you now, that is never going to happen.
Yeah.
Unless there's some drastic policy change, it's not going to happen. We've got one of the fastest growing population in Europe, one of the fastest growing populations in the world. We've got a strong workforce, a strong economy. We've got, the economy's booming at the minute, but we just can't build houses.
Yeah.
So if you ask me, it's a really safe asset class at the moment.
Yeah.
There's nowhere better to put your money.
Mm.
And the property prices have gone up, but that's because there's a massive supply demand imbalance.
Yeah.
So we would love to be funding 40,000, 50,000 units a year, but currently it's just not happening.
Yeah. And then again, in the residential space, for someone that may be listening in, because obviously I know there could be 100 other people like me out there. We have our funds built, thank God. But there's plenty of other people that have that same drive. And like, if you can pull off in the property space, and I'll go back to your lending now in a second. But if you can pull off in the property space a derelict house, a rundown house, and you bought it for say 200,000.
We are delighted to announce that this podcast is sponsored by Platinum Ventures. Platinum Ventures, we buy houses fast.
Hi Dublin homeowners, are you struggling to sell your property fast in the open market? Or maybe that deal has collapsed? Okay, if you're facing this type of a problem, we have the perfect solution for you. Welcome to Platinum Ventures. We buy houses fast. Any property, any condition. We close out them deals within 28 days. Cut out the stress of having endless viewings and having to pump money into property only to sell it. We are not estate agents and therefore you will pay zero agent fees. Visit platinumventures.ie today. Platinum Ventures, we buy houses fast.
And it's in high demand area and you can get that mortgageable.
Yeah.
I mean, there's a massive queue of people to buy it off you. In fact, most of them houses are selling within a 2-week period.
Yeah.
And they're selling for telephone numbers at the moment.
Yeah.
We know that.
Yeah.
So who makes the money out of that? Me.
Yeah.
And whoever funds me.
Yeah.
So if someone wanted to take some money out of their stock market and diversify their portfolio and put it into property bridges and fund another residential developer, I know your minimum loan for several reasons is quite low, but let's just say that it wasn't. Is the door open for anyone to even chat to you about maybe a lower rate, or is it just pure blank no?
Our minimum loan size is 500k, and the reason for that is it doesn't really make sense, not just for us but for the borrower. So when we go through our due diligence process, like that's a fixed cost. We're going out to lower the value of the QS. That's a fixed cost, and anything lower than 500k. Your fixed costs are just too high. They're taking too much out of the project. So it doesn't really make sense for the borrower either.
Yeah.
And that's why we do it.
So would Property Bridges look in at, say, my business model and say, well, Jesus, his numbers are actually stacking up fairly well here. We should have a look, because I know you're going to be scaling up. You doubled your business last year. I mean, when we met 4 years ago, this regulation was a massive dark cloud over your head. I remember you were just come from a big meeting that night and you were like, and this thing is, there's always something crippling us all the time in business. And I think back then, which we'll go on to now in a few minutes, was crippling you well. But let's just say you looked in at my business model and somebody else like me was coming to you. Yeah. Is that something Property Bridges might say in the future? Well, we now need to look at the residential space at this level, because there's a lot of people going to, I think there's a few good other bridge and lending companies here in the country. Yeah. But I think we're starting to hear of a lot more flooding through the doors here. Yeah. And there's a couple of sharks in that space. And there's a couple of dogs in that space too. And we all know if you get into bed with dogs, you come out with fleas, it's not good for you. Yeah. You might get fast money now. Yeah. But they're going to work through a problem when it comes. Do they have a reputation behind them? Not too sure. And when people tell me some of these names, I'm like, look, there's zero track record. I can't give you any advice in that company. Yeah. But is that something you and your team may look at in if them loan size was, say, up around the 500,000 that they needed to borrow to get 2 or 3 assets?
Yeah, like if it's around the 500,000, we'd take a look at it. But going lower than that, I don't think it makes sense for us or the borrower. So in that situation, like if you do find a derelict house for 200k and it needs 100k renovation loan, we'd ask you to try and put two together and come to us with a 500 grand loan.
Yeah. So there is ways that they can talk.
Yeah.
Yeah,
But
'cause-
then, like, bear in mind, then, you need to have the equity to put in too. So,
Mm.
like, the minimum equity we'd take is 20% of the overall cost.
Mm.
So, if we're giving you a loan of 400k, like, you need 100k to put in.
Yeah, well,
Yeah.
there's a lot of people there's definitely a lot of people in their network
Yeah.
that doesn't seem to be a problem too.
Yeah.
And
Yeah.
if you're listening to this tonight, again, if you're a little couple of months away from this, in my opinion, you're a bloody idiot because your money's sitting there, it's unemployed. It's like having
Yeah.
unemployed staff sitting there not making you anything. And your money is eroding away, whether you think it's safe or not.
Yeah, no,
I
I
mean,
would.
it should be
I
in
would
property.
encourage that as well. Like, I mean, you don't have to invest in us, but I would encourage everyone, like, to, deploy your money into something. Like, because if it's just sitting there, we have gone through a period of high inflation.
Yeah.
And your money's just getting eroded if it's sitting in the bank, not doing anything.
Yeah, well,
And there are a few more options about now. If you're with Revolut or some of these new banks, you can get, a couple of percent on deposit now, which is something. And then you've got options like us or, the stock market. But
so let's just go back to again. I love adding value
Mm.
back into my own group because I have to look
Yeah.
after them first, and anyone else listening in, it's just an added bonus.
yeah,
Right? But again, and I do these podcasts for me. Let's say it's Paul Green, and I again, I'm probably a year away from pulling the trigger because my other business needs me a lot more,
yeah.
and I'm sitting on 65,000, and it is dead. 2 questions. Number 1, officially, how much do you think through inflation he's losing, whether he likes it or not? He might still look at his 65k and think he still has it.
Yeah.
But what is he officially losing?
Well, I think the inflation rate, the rate of inflation was announced this week. I think it's just fallen below 2%.
Okay.
So, like, previous years has been a bit higher, but yeah, at the minute you're losing 2% a year.
So
Yeah.
AIB definitely aren't backing that thing
Yeah.
because AIB
I don't know what the interest is, but it's not 2%.
ridiculously low.
Yeah.
I know
Yeah.
Bunk maybe have
Yeah.
trying to get into the Irish market. They've sent a little bit of
It's a
a
funny story, actually. Like, I went over to a big property conference in Germany last year, and actually very un-German. Like, the underground broke down on the way to the conference center. So I saw a guy in a suit. I said, "Are you going to the conference?" He said he was. So I said, let's jump in a taxi. And he worked for a German bank. So I'll not name them, but he was lending in property development in Germany on some big projects. And I asked him, like, what sort of rates would you be lending at? And he said he was lending at something like 3.5%. 3.5%. I said 3.5% over your IBOR. So a lot of the money
Yeah.
now is priced on your IBOR, which is the overnight rate, the risk-free rate. And he said, no, 3.5% all in. So I said, well, the Euribor rate is 4% at the moment. So if you're lending out at 3.5, I was like, what rate are you giving your savers? And he was like, we're not giving them anything.
0.
Yeah. So this is a German bank.
That's so funny you said that because
So I said, but if you're giving them 0, would they not go somewhere else? Would they not put their money somewhere else or invest in the stock market? And he's like, no, they're just too conservative and they're too lazy. So they just keep their money with us at the bank, earning 0 money, and we can lend it out at 3.5% or whatever.
that is so mad that you say that because one of the people I met in Necker, Ireland was borrowing in at 3.5.
Yeah.
So she borrows from 1 million to 10 million.
Mm.
He borrowing at 3.5%. She loaned it out at 6. I was like, wow, that's a bit.
Yeah.
You just making. She goes, yeah. I just know a guy in the German bank that I can get the
Yeah.
money off at this level,
Yeah.
and I lend it out at that level, and I get the little token. I was
Yeah.
like, well, hang on a minute, that does not make sense.
Yeah.
This shit actually happens. Not in Ireland.
Yeah, not in Ireland. No.
But so back to that, back to someone that may
But
have.
the point I'm trying to make is, the banks, they'll give you nothing on your money,
Yeah.
and if you're not going to take the initiative to put it somewhere, you're just going to get 0%.
Well, that's the 100. Like again, I think the statistics show that 90-something%, could be wrong here, but there's definitely 85% of that. It's not company money that's sitting in the Irish banks tonight. It's deposit money. So it's personal money. So let's just call it there's 150 billion sitting there losing, guaranteed that we know 2%.
Yeah.
So if you haven't even got something defined that pays you 5, 6, 7 property bridges, I've seen some posts for some different projects up around the 10. I mean, they definitely should be keeping their eye on stuff.
Exactly. Yeah.
And put a little bit in, build a relationship, and then see what it is. So again, if someone's listening on tonight and they say drop 25,000 in, what is your rough payment in to a project there?
Well, anyone can invest from 500 euro, but what we've seen over the years is people are starting to deploy a lot more with us now, because I think people initially kind of maybe dipped their toes in, put a couple of grand in, got the money back, reinvested it, put a bit more in. So we had people putting in 50 grand, 100 grand, on a single transaction.
Yeah.
So really, it really depends. We've all sorts, also like young and old. People putting in 500 euro, people putting in 100 grand.
Is your level of investors? Will we go back to them? If we go back to these baby boomers, is what Ed calls them.
Yeah.
Where like when these people are going for the easy, shiny stuff all the time, is your investors like mid 25s to 40? Are they?
No. They're older. So it's between 40 and 60.
You haven't even got to 25-year-olds. That's when you say lazy, and I say lazy all the time. I think they're completely lazy because they are going down. That's probably why Paddy Power's stuff has gone through the roof, because they'd rather go down and write a Sunday ticket for the football match and try and win on that. You're not even seeing the young people. That needs to change. So 500 quid can at least get them involved.
Yeah, yeah. And if you've got an interest in the property market, stick 500 quid in. Like, we publish our credit papers. So we write about the deals. We write about, all elements of the deal and the construction budget, the borrower, the exit, the security.
So they're learning.
So if you want to learn about it, you can stick 500 quid in. We give regular updates as we raise the money, or, the project is progressing. We would stick photographs up and people can follow it, and then it's repaid.
So if I'm going to stick 20 grand in tonight, I log on, I set up, I go through all the anti-money laundering stuff, I get myself registered in. Tomorrow morning I make the deposit of 20k in.
Yeah.
What am I looking at here? I'm obviously on your website. Am I looking at Paul Green's project? Am I looking at another project?
So whenever you log in, so you've got your own personal dashboard.
Yeah.
And you've got your own personal IBAN. So whenever you deposit money into us, it sits with our e-payments provider. So we never handle any client cash.
Okay.
So you deposit the money in, it pops up in your Property Bridges wallet. And then the next time we go and launch a project, then you can choose to invest in that, or you can wait to the next project, or you can wait till there's a project that suits your risk profile.
Yeah.
But basically, we're putting a project live, maybe once a week, once every 2 weeks. So there's always regular projects going up there. So you deposit 20 grand in, within a month, you should have a choice of at least 2 or 3 projects that you can invest in.
And can you split that 20 grand to?
Put in 5 grand in 4 projects if you want. Yeah.
Okay.
Yeah.
And then on the return side out, so let's say I invest, is there a ticket to say that I invest for 12 months, 24 months?
Yeah. So all that's advertised. So the minimum term is 3 months, then we go up to 24 months. We'll also put in the loan to value.
Yeah.
So the maximum loan to value we can have in the platform is 75%.
Okay, yeah.
So that provides a bit of a cushion for your investment. And then we put in the interest rate as well. And then whenever you go into credit paper, you'll see the full details of the loan in there.
Yeah.
Yeah.
So again, for anyone that's maybe knocking around the property space that want their money into property, and they don't just want to get a return on their money. Because I find that a lot when it comes to investing. People will invest in something that they have got a little bit of an interest in.
Yeah.
And the interest rate isn't really, now you give a fantastic interest rate. But I mean, they're getting a chance to educate themselves on different tranches, and they're helping with the prices.
Yeah, the other thing as well, like I always say that, like every euro you give us, we lend that to like a home builder who's building homes. If you're investing in Tesla or Nvidia or whatever else, like you're not actually, like that money, it's not going in to build cars. Like, you know, that the Tesla stock is going up and down on the secondary market. Like people, you know, you're buying from another shareholder, you're selling it to someone that comes in after you. Well, like the company's not getting a major benefit. The Irish economy is not getting any sort of benefit. When you invest with us, it's going directly into building homes
in Ireland.
So we think it's a social good as well as providing a great return.
Yeah.
A great return for the level of risk. It's also providing social benefits. So we think it's a win-win.
Yeah, definitely. My only experience with stocks and shares is one sheet of paper upstairs in a folder that my wife reminds me of every now and again when I fuck up. That we invested 10 grand in, that company is dead and buried and closed. And I was like, never, ever again, you could tell me anything about the stock market and I will never, like I've heard too many horror stories. My money goes into property and I hope everyone else should too. Now, and we'll finish up on this one. And again, thanks a million for coming in
thanks for having me. It's been great.
Breaking it down and simplifying it down again, because as I said to you, a lot of people can't get the big chunk of money and want to get involved in the property space. And here's now the opportunity that they can. Last time you were in, I remember the first few minutes of even meeting you, I was like, did you have a bad day today? Or, the stress levels. And I do think it was maybe 4 to 5 years ago when we were upstairs, one of our first events, and we had a great night up there, but the dark cloud of regulation was coming in. And I think it's very, very important in if anyone's going to invest any type of money with anybody, it's done legally, morally, and ethically. And I remember at the time you were coming into that challenge. Number one, after meeting the people I met in your space over on Necker Island, and we had great chats with them, and they're very, very open and honest people. The margins are really, really tight. It's a tight space.
Yeah.
And back then, I'm sure your dreams were getting it to where it is now.
Yeah.
The last thing you needed to do was probably invest $1 million or so into
regulation and So basically what happened was whenever we launched the business, it wasn't regulated. So, you know, it was fine to launch, but like everything we were doing was absolutely fine. It just wasn't overseen by the central bank. There's no regulation in place. That regulation came in on a European wide basis. And in Ireland, then the authority for that is the central bank. So that came in November 2023. We got regulated, but we were working on that application for at least 12 months. And the amount of work and resources we need to put into that. And then, but it's an ongoing thing. So getting regulated is just stage one. Then you need, compliance people, risk people, PCFs in the business. So it's an ongoing cost. We have seen a benefit of regulation, and we understand that, as we become regulated, it'll drive the business forward.
Yeah.
So we do think it's a good thing, but at the time for a small company, it was a big cost that we had to take on.
Yeah. And it was a challenge.
You know yourself, like you're trying to keep your head above water. You're just trying to grow the business as best you can, and then when you have to put your resources into that, kind of slows the growth a bit. And
and especially if you're trying to grow a company. I mean, I think for anyone that's listening in, if you do something overnight, it's a stroke of luck. I think all entrepreneurs need to look at the 10-year mark.
Yeah. The
10-year mark is where you're really going to go, I done it. And if you can get to 10 years, a lot of people say a year or 2 years. I mean, you're only finding your feet. If you've got money, keep pumping it back in, keep fixing the problems. keep your wages as low as they can,
Yeah.
and keep your performance as high as they can, and build that trust brand that you've clearly built with Property Bridges now. And it's an honor to see that you're helping builders that really have no doors to knock on. I mean, if we take it to the next level,
it's difficult out there for builders. Like, I know, for people listening that aren't involved in property, like, it's easy to see house prices going up and rents going up and thinking, like, builders and developers are earning a fortune, but it's not the case. And it's kind of hard to explain to the layman, but there's been a lot of cost inflation, number one, but the policies and the system in place is very difficult at the moment. Like, we're looking at a 15% profit margin, and we're taking some risk when we're lending, but it's the developer's money that's going in behind us,
Yeah.
or in front of us, whatever way you want to look at it. But so they're taking huge risk for a 15% profit margin. But don't forget, for every house built and sold, 13.5% is going back to the government.
Yeah.
Every time, every 10 units you get planning for, 2 have to be handed back to the council at cost.
Yeah.
There's development contributions, there's planning fees, stamp duty. The services are expensive. Like, the delays in getting services and connected DSB and Irish Water have been a bottleneck.
Yeah.
The delays in planning and the whole rigmarole you have to go through in planning now.
Yeah.
It's difficult. It is a difficult game. And that's why our margins are tight, because developers need to fight for every penny. Like, the margins on development, even though it might seem rosy to outsiders, but the profit margin, even though prices have gone up, the profit margin hasn't really gone up.
Yeah, you sell a house for 400,000, you have to subtract back 13.5%, and you've been hammered along the road, along the way as well. The profit margin's there's probably a wage in it for a good builder nowadays, or probably a good wage to keep him, overhead. And again, I have a very, very good friend that knocks around in a good area, and he does once-off builds, and that's what he specializes in. Like, he's doing this since he's 16. He knows this business like the back of it. It'd be an easy bet for you to fund, although he's funded, because this is what he does. But he said to me, Paul, listen, Irish Water and ESB, they are the two people that I would throw the towel in with this. It's just too difficult.
Yeah.
And you've got payments going out every month, and you're sitting there and you're asking the question, is it going left or right?
Yeah.
And nobody tells you. And you could know in your own heart it's going left.
Yeah.
And the son of a bitch is down will make you take it right. And and that could be 6 months down the road.
Yeah.
There's no need for it.
No, and the narrative out there as well, like, it's not like we're in a housing crisis. We need home builders. Like, the majority of home builders now, I think the media likes to paint the picture like we're still going back to the Celtic Tiger developer. The reality is, like, the people building homes now, like, they're not the same guys that were building homes back then.
Yeah.
They're different people that might not even be involved back then. And the majority of them are good builders, just want to build houses. Like, we should be supporting them.
Definitely.
We're kind of treating them like they're part of the problem.
Yeah.
Well, who else is going to build the houses? Like, the government's not going to build the houses.
They're definitely not going to hit 30,000 this year. No, there's no.
And if the government do start trying to build houses, it's going to cost a lot more than what a private developer is going to build it for. So I think like we need to be doing more to support these home builders. It's the only way you're going to get more units built.
Yeah.
Like, they need to make it easier. And
we've asked government in the very first week we started here. We've the same number, we've the same people, it's the same process.
Yeah.
And they tell us the same bullshit every time.
Yeah.
Definitely come in and do a talk.
Yeah.
They don't want to, because they know is all a builder needs to know is, can we have some help?
Yeah.
And their answers to them is, we'll give you all the help you need.
Yeah. No, they're not asking for handouts. They're just asking, like, the government need to put more resources into planning, into services, into infrastructure. Just let the private market get on with it.
Yeah.
Just, like, remove the barriers.
Yeah.
Like, just, like, make it a bit more streamlined. Like that's all they're asking for here. Like,
I think their main push today in government was that we now may allow granny flats be to solve the housing. Like, I mean, it's just pure stupid shit.
yeah, it's kind of it's small minded as well. Like it's we need to show a bit more ambition as well.
Yeah.
Granny flats aren't going to solve the housing crisis here. Like,
David, it's been a great chat. It's been a great. It's great to have two different sides of the equation. It was great that I could just pull up one of our buildings, which I couldn't have done last time because I was like yourself. I was building this thing out, and I'm delighted that we have a couple of things now, which is why I always say that keep your eye on that 10-year mark, because we'll be probably back here drinking whiskey, having a crack. But again, how can someone, if someone wants to invest with you guys tonight or log on or tomorrow, it's not why we're here, but I do think your money should not be sitting in the bank. I think you're an idiot, and you're an idiot if your family's money is sitting in the bank when there's an opportunity to get 7 or 10% on it. What it should be in the stock market, I'm only telling you, don't take my advice, but learn from my lessons. I lost a fortune on it. If someone wants to connect on that, it's just straight over to the website, is it?
Yeah, just propertybridges.com.
Yeah. If there's a builder that's sitting in tonight, that's sitting back on a building and he's been refused by 10 people and you're the 11th.
Yeah.
How does he how does he even try and knock on that door, and he might get refused again, but how does he go?
Yeah, if he's been rejected by 10 people, it might not be a good project, but if he's been rejected by the banks, let's say, and he wants to come to us, go on to the website again. There's a section for borrowers as well.
Yeah.
So go on to the website, propertybridges.com, click on the borrower section, and there's a little kind of questionnaire. Just submit a question, and then we can ring you back.
You can arrange a time or whatever.
Yeah.
Your team has grown hugely, and you've some big wigs in there now, some really, really strong pushers. Who's next under you at this moment in time? Or are they all collectively?
We've got a pretty flat structure. Like, we're all kind of one team. It's we try and keep it pretty tight. As you said, the margins are tight. Like, so we need to keep it tight. But we've had to hire or people have upskilled into a compliance role.
Perfect.
Then we've had to bring in a head of risk as well. And then a lot of the work, some of the work can be outsourced, like the QS work, valuation, legals, that's all outsourced.
Yeah.
So that's great. It's not a fixed cost. So if you get the business in, great, but it's a variable cost. Yeah.
What do you do for a bit of fun inside the building?
Well, we've just moved office actually, so we're in town now, which is great because so there's a lot more to do kind of in the area.
And the reason why I asked this is because I'm obsessed now. What Branson kept saying to me is, now if you want to build, or anyone that you know is in the middle of building a good company. Yeah. Make sure they have fun. Make sure their staff have fun. And I'm like,
Yeah. We probably need to work on that. Like, if we do have a good work environment, I think we've got a good culture in there. In terms of having fun or team days out and stuff like that, probably something we need to work on.
When you're in town, you can go straight out in the piss anytime.
Exactly, yeah.
It's been a pleasure having you on. Thanks a million.
Thanks, Paul.
All right, that's the wrap on this podcast for now. Don't forget to reach out to Property Bridges, have a look what they do, and get yourself educated a little bit more. Drop a small €500 in, understand the property market, and help with the housing crisis. All right, and those of you listening in on YouTube, do me a favor. Go hit that like button, go hit the subscribe button, do all the things that them algorithms like to help us grow our platform out. For this week, this one is over. Take as many notes, go over as many notes as you've taken, and we'll see you next week.
And a brief thank you to today's sponsors of our podcast, Platinum Property Training and Platinum Ventures. Thank you very much for listening in.